All right, guys, welcome back to another video here on the Dividend Doggo Show on YouTube, and I am bringing you into the weekly portfolio review. As you can see, we are ending up near all-time highs. This week was absolutely stellar for several different reasons. The first thing we're going to do is go in here and see what happened this week. So we earned $11.47 in dividends, but overall the market gain pushed the portfolio up to all-time highs at $12,268.48. So that is a pretty stellar week, and let's go in and take a look at the portfolio here. I did do one small buy this week, and I'll show you what that is here in just a moment. The consumer pie overall was up 1.4%. Mo came up pretty significantly. Costco was up 4.39%. Man, I had a goal of wanting to get this up over 10K this year and get Home Depot up at the beginning of the year this year. And man, I really should have pushed more money toward Costco, because when I look at this, just for the quarter for Costco, it's up 26%. That's just absolutely stellar. You can see this like roller coaster as, you know, this pie has gone up over the one quarter, and it looks absolutely amazing. Lowe's is pushing 27.63. Just added a pretty decent chunk into that, but at the 1 week review, like Target was down a little bit this week and Home Depot was down a little bit, but just about everything else was up pretty significantly. Tap being up 5.7%, the leader for this pie for this week, and that's absolutely pretty wild. Then we get into utilities. VST had some interesting announcements. I don't want to push too much on VST right now, because it kind of looked and felt like a sales pitch of announcements, because you know, the news for 2021 is still bad. You know, they paid out a ton of money, like almost, I think the grand total now is $2 billion due to the winter storm outages and the charges and pricing that went through the roof during that winter storm in February. So the recovery for that is still actually going to carry over per the announcement into the beginning of next year. However, their forward guidance was pretty phenomenal. The free cash flow for 2022 looked really solid. And their overall plan that they had put forward last year actually looks like it still might be possible through the combination of the share buybacks. They're doing preferred shares for shareholders to then turn around and buy back a bunch of the shares overall. So it's kind of interesting the way that it's working out, but the stock shot up pretty significantly this week. You can see that it peaked. It was pretty high. I believe it peaked just under $21 and dropped back down to settle on Friday at $20.50, which is, you know, a 6.72% increase change in the just one day. So I didn't listen to the earnings call, but I'm probably going to when I get some free time this weekend. I read through everything and I love the plan. I'm hoping that they do the dividend upgrade that they had intended to do from the 2019 plan. They had the 2020 and the 2021 plan, both in there, really, really solid. So they're basically kind of preaching that they're going to do about 175% increase in the next 5 years to the dividend, which doesn't quite double it, but it is it more than doubles it, I believe, from where it stands today. But if they do go forward with the raise, I believe it's 60 cents yearly. We'll find that out in February, but it could be as high as 76 cents is what they had wanted to get it to for 2022. So if it makes that jump, that's absolutely wild to me. I'm expecting somewhere closer to about 8 cents, which is a 2 cents per quarter raise. I'm keeping my expectations a little low on this one, but overall that is still a really heavy increase if they do go with 8 cents. So I'm just going to hold. I'm kind of in a holding pattern on this. This stock could go back to its highs of like 24 share. If it does, I'm probably just going to consider holding it. My sell point for this is if I do a double up. If this stock doubles within a 1 year time frame, I'm going to be tempted to sell off some shares and just take the gains and roll them into a more diversified setup, because this stock truly has been a roller coaster when we look at this. This is when the outages information was given, and I rolled a bunch of money into it, but it is definitely a roller coaster of excitement and emotions. But I do believe in the stock significantly, as you can see there. I put my money where my mouth is on that one and bought in pretty heavily earlier this year. So I'm hoping to hold it at least for a year. I hope it doesn't spike to like $30 and then make me want to take the gains and pay the long-term rate as well. But I'm hoping to get the long-term tax benefits, not the short-term ones. But overall, unless it does a double up, I'm just going to hold it, see how the dividend grows. The plan for that stock was always to hold it for about 10 years and see how it grows. Healthcare, as you can see, we're at 1 year right now, so we'll go back to 1 week. Healthcare was up. That's mainly off the back of AbbVie and Johnson & Johnson. We're both in the green. I only hold those two right now. Johnson & Johnson being a relatively small position compared to AbbVie. I am going to try to boost Johnson & Johnson up, I think, in 2022 a little bit. Maybe get it closer to about the 10K mark overall. Then we have the finance pie, and in finance, Bank of America and JP Morgan were down, but Bank of OZK was up almost 7% this week. So it more than offset, the 1 week losses in JPM and Bank of America to keep this pie green. Also, Hingham came in at 4.78. I really do wish I had picked up a few more shares of this, because I've only had this stock for just a couple months now, and I first bought in August 6th, I believe. Yeah, August 6th at $1,498, and that was to pick up just under 5 shares. And my cost basis was $1,500, and it's already up to almost $1,900. So it is just grown. It's been a stellar performer, and it's continued to grow. And Bank of OZK brings me into the weekly buy. I did do an 11 share buy, $527 into Bank of OZK to bring up the share count a little bit in that stock. I do still like it as a very solid position. It's a smaller bank. It's got a little bit more wiggle room to grow than some of the big boys. However, the big financial institutions, everyone's piling in on the JPM Bank of America action. I think they may get some excitement at the beginning of this week, because we did have the Fed news come into play. They did approve the, 1.2, I think. Don't quote me on that. I think it's well over $1 trillion. The government just approved. I think it's the partisan bill. I think that the finance sector might be up a little bit at the beginning of the week. That's just my guess. I'm not super into following politics with the money, but it does have direct impacts and correlations. Through the week this week, we saw some great gains coming in through SCHD. That was $1,000 pickup in gains for the 1 week point, which is great, because it hasn't performed as well for the latter half of this year as it did, for the beginning of the year. I've only held this since about May. I do believe in this fund as being one of the core pillars of this portfolio, and I do expect to get that up into the $100,000 range within the next 2 years. I just think that it's a solid place to park your money and get some really nice returns over time. Industrials, let's go back to 1 week. Industrials was just in the green, 1.8%. That being carried by Lockheed Martin coming back up a little bit, Raytheon and 3M picking up some slack here. Caterpillar was just under 1%, so everything in the green for industrials, and I think that they may also have a green week coming into this next week. Now, real estate was barely hanging on there. ABR went down just a little bit, which might present itself as a buying opportunity. It's down a couple percent this week, so you might see a slightly targeted buy with a little bit of extra money inflowing into ABR. I believe they pay out their dividend. They pay out the dividend November 30th, and the 12th is their ex-dividend date. So I'm sorry. Yeah, 12th is the ex-dividend date for that. So I'm probably going to sink a little bit of money into that, the MREIT there, and see if I can pull that up a little bit. That is close to yielding $171 right now is the dividend payment that will come in on November 30th from that. So that's before I do any additions to it, but I am looking at you for a buy for next week, especially if you're red on Monday. I'm going to go ahead and get a little bit of extra money thrown in there to boost that dividend quarterly payment up. That is one that I've been watching a little bit, and I'm happy that it's having a little bit of a pullback this week, and we'll kind of see how that goes going into next week. But I am looking at that one as one of my targeted buys for the, second week in November already. The end of the year is creeping up so fast for us. I've been super busy the past couple weeks, so let's go into energy. Now, overall, Phillips 66 came up this week, which makes me really happy because it's been an underperformer for me. For when I go through and I look at this all-time view, it is down 10%. Happy to see it up on the week, 4%. But I do want this to pull back up a little bit, and I'm kind of thinking about rolling S&P and PSX into Chevron, and I'm just gonna probably park that money there, trim these down a little bit, and have only the 3 core holdings. I am going to try to add a little bit to these in next year and see if I can build these up a little bit closer to the 5K mark for each of these, VLO and CVX. I think they've both got a pretty solid potential for a decent set of returns for 2022. Now, in the tech section, we got the performance here. We got, Apple kicking it back in, 1% gains for the week, and Microsoft kicking it back in. If VST does end up being a really solid play, I will pull the money out that I pulled out of Apple to build that position up. If you've been following the portfolio, a lot of people probably would think that I'm crazy. I sold off about 30 grand worth of Apple shares, and I sold it off at a profit this year to buy the dip on VST when it was dropping in February, early March. Now, VST could easily recover and keep going, but I'm not really planning on changing anything to do with that stock unless it is a secured double up in the capital gains department. If they do the raises the way that they want to for next year for dividends and the buybacks, I think that it's got the potential to potentially be a double up, but not within probably 2 to 3 year time frame, maybe by 2024, 2025. But I do hold Apple and Microsoft both via 401k funds, which I believe they're like 6% and 4% in our 401k funds. So we have very tech heavy 401k plans by intention. So I have not gone super heavy into these, but I do really like the potential that Microsoft and Apple both have for the next couple years. I'm definitely a bull on both of those companies. So overall, monthly stocks were up about 1%. PIMCO, BST, and STAG being down 2.6% is making me look at that as a potential target buy for next week as well, if that's also down. I've wanted to raise this up a little bit, but it hasn't hit the radar the way that I wanted it to, and overall, it is up pretty significantly. I'm wishing that I had put more into that. Overall, as you can see, it's been a great performance point. So has BST. And overall, even PIMCO is finally getting back in the green and staying there. PIMCO had a really hard recovery for this income fund since the pandemic hit. But it is a high yielding stock. So I didn't expect a lot of capital gains performance from this overall in the portfolio. So if you have any questions for me this week, throw them down in the comments. Let me know if you did any buys this week. I do greatly appreciate every single one of you. We are just at about the monetization point for this channel, so I'm really excited to bring that to you as an update, just to show you what the actual channel is earning. And I plan to try to do something with either charity or a gift giving thing, going into the monetization of the channel and doing some type of benefit work with that, until it becomes a point where it's really impactful. And I'm really excited about that monetization is going to be a thing for the channel. I don't intend for this to be a full-time thing. I just want it to be something positive and impactful that, brings me direct happiness. And it basically just shows you, the viewers, that you're making a positive impact just by watching the channel, hopefully seeing and learning something, being inspired to invest and try to grow something for your future. And I really do appreciate and I care about every single one of you down in the comments below. Please let me know if you have any feedback for anything on the videos. I believe M1 is still doing a pretty decent promotion. I believe it's $30 if you use the referral link that you get just for signing up with an account for $100. You'll get an additional $30 and I will get $30. I do appreciate every single one of you that have used the referral links. I believe there's been quite a few of those. I think we're up to like 11 referral links that have been used. So that is absolutely amazing. Thank you very much for watching this video, and I do hope that this inspires you to go in and start your journey in investing. And I hope that you have the best week possible and enjoy your weekend and get some relax and decompression time in. Thank you very much for watching, and as we come closer to the holiday season coming up, it's going to be absolutely wild. So I really do appreciate all of you. Have the best weekend possible. Dividend Doggo out.